Finance Bank, where the management is in talks with Sajit from ET Now. Sanjay Agarwal, who's the managing director, is speaking to Sajit. Let's go across and take a look.
Thank you, Ankita, for that. Joining me now is Sanjay Agarwal, who is the Managing Director and CEO at AU Small Finance Bank. Sanjay, thank you very much for joining us on ET Now. Let's start off with the NIMs, net interest margins. You saw a healthy uptick coming in Q4 for you. What were the drivers for this NIMs uptick, and how do you see this structurally changing the way your NIMs will go on from here on?
So, Sajid, as we explained in our call yesterday night, that this remains one of the most strongest quarter, being fourth quarter, right? And so we had cost of money coming down. We had some advantage around days in terms of calculation. Then, of course, the slippages were less. But if you ask me, this remains one of the strongest performance as such. But to extrapolate that, we can be around that number every quarter won't be right. But structurally, I can tell you that, we are a small finance bank. We deal with more unserved, unreached markets. We have vehicle finance, we have mortgages, we have gold loan, we have microfinance. We want to build our personal loan portfolio. So, and we want to price our risk, right? So those all asset classes and the customer segments actually have a high yield book, right? And so I don't think that yield would be a challenge. It is about how the cost of money comes to us, which is not in a hard end. And being an SFB, we always price it little better than the other competitors. So I believe things are very good, honestly, from last 1 year. Suddenly this external environment became a little vulnerable. So not able to project as of now, but I strongly believe that this whole challenge will go away very quickly. And there is a lot of push for growth in our country. So there won't be a high interest rate regime as such. But let's see, how we build our cost of money this year. But we will remain in that zone, which is more important.
Interesting. We saw you growing by nearly 24% in terms of business in the last quarter. Do you think 24% growth, which is very robust, is sustainable, and you may be able to meet the same thing going into FY27 as well?
Ajit, we have, because, we have become a sizable bank now. Our balance is close to 2 lakh crore. And so we can't grow in absolute, absolutely. We have to be relative. And the best benchmark is, how much the country is growing. So we have given a guidance that we should grow in the range of 2.25 to 2.5 to our nominal GDP. So last year the nominal GDP was around maybe 8ish. So but we have grown around 22%. So this year, we believe that our nominal GDP should be in the range of 9 to 10%. And in that sense, we should grow in the range of 23, 24, which should be achievable, right? And so we want to be more relative in terms of our overall country growth and then see how we perform.
You've been aggressive with respect to the kind of interest rates that you're offering to your depositors, especially in the savings account and as well as the time deposits. Do you see there will be any marginal pressures that will come in because of that, or your fixed rate book will manage this kind of pressure?
Ideally, I just want, my current account to grow, maybe 50% every year, but it is not in my hand. Liability or deposit franchise is very competitive, and we need to have good reason to go to the customer and say that bank with us. But being an SFB, and there is no right to get such a low cost deposit over the years, but team has done phenomenally good job in terms of building up product, services, brand, channels. So I believe that the cost of deposit is one dimension, but we need to see that the quality of deposits, the transition done by a customer with us, how much stable money we have, and so it's a very, I would say, not an easy task to build a deposit franchise at so many dimensions, and I'm very happy the we are playing as per the requirement, and so I think interest rates on deposits is a matter of every month. Honestly, we have an algo where we decide. So I won't say it will derail our whole growth plan. But of course, if higher interest rates is there, it is always remain challengeable because we don't want to make our yield higher, right? So it depends. But we are much better placed than many of our competitors because we have right asset class and we have a right way to build deposits.
We saw your asset quality improve and also your slippages come down by nearly 17% on a quarter-to-quarter basis. As you look into FY27 and the kind of geopolitical climate is there a risk which is there, or your portfolio is well balanced to manage that kind of risk?
So I think the biggest advantage we got in last 6 months is that microfinance has become more stable. Our credit cost around credit card has now coming down. The other classes also has performed better. So I don't think, honestly, that the external environment will continue for a long time. It might impact us a quarter, maybe 3 to 4 month period. But in the long run, I believe that this year, this financial year, 26-27, will be much better than the last year.
Sanjay, the RBI came out with the ECL guidelines. Is there going to be any impact on you of that? Are you going to take some kind of calibrated move to have provisioning done because of that?
Yeah, so I'm a strong believer in that guideline because I believe that if you want to build a bank for forever, and banks are not meant for decades, they are meant for centuries, right? So any kind of initiative or any kind of framework which allows bank balance sheet to become stronger and people can trust those balance sheets. So ECL allows you to really estimate your credit cost, upfront, and allows your balance sheet to settle down. So the back of the envelope calculation need to be done. It just came yesterday night, but I believe the initiative is amazing, and whatever will be required, we'll do that.
You have an application with RBI to become an universal bank as well, which was filed in March of 2026.
Yeah.
But by the time RBI comes in, are you planning yourself to how to transition into an universal bank? What kind of preparations that will you need to do at your end, as and when the approval comes in?
So, finger crossed. Honestly, we are also eagerly waiting, to get a regulated nod, and this is one of the kind of milestone in Indian banking story where banking industry where some SAB will get the universal tag, and largely I have what we have done over the last 9 years that we have understood our customer segment, has built product lines, we have built deliveries, we have built channels, we have built our risk framework, governance framework. So I don't think on an operational level much to be needed, but being in a universal, it adds to your more responsibility, right? So we need to play with expectation of all the stakeholders. And of course, we want to create some kind of brand awareness around this achievement or tag, so that more and more customer can enjoy and can work with us.
You also guided for a higher return on assets, around 1.8% for FY27. Is that an achievable one? And what will be the guiding, forces to meet that 1.8% ROA?
So we guided on the exiting quarter of FY27, that would be 1.8 ROA. That was way back 3 years back, right? But we have exited this quarter itself. So, and it was more of about that how we are building our bank, internally, how we are monitoring our inputs, how we are managing the whole customer segment, product, and all those things. So, I think I would say that again, that has been achieved in this quarter, but every day is a new day, and we need to play, in the sense to protect everybody's interest. And so largely, bank looks very solid, very people are really motivated to work in bank. Our customer segment is very happy, and there is not much to offer from our side to this country and to our own people. So I have to look forward towards that positioning where AU becomes one of the most, I would say, preferred bank to this country.
Sanjay, we would love to talk more on your plans as you move towards transition yourself towards an universal bank. But I think today we are short of time. So thank you very much for joining us and giving us a perspective of what FY27 is looking like for you. Thank you very much.
Thank you so much, Ajit. Appreciate it.
And back to the studios. Kavita is there.